Welcome to the Vital Dawn podcast for Thursday, March 25th. You're looking at a pretty quiet morning. All of the major U.S. equity future indices are trading up small. So you have S&P futures up about 5 points. That's about 13 basis points. Dow futures are up 53 points. That's about 16 basis points. NASDAQ futures are up 25 points. That's about 19 basis points. So mild rebound in all the equity futures. You're not seeing a dramatic discrepancy between growth momentum, and that's actually been the case for the last couple of days, where you're seeing somewhat of a mild breakdown in the relationship between growth momentum. So underperformance in one does not necessarily translate into significant outperformance in the other. The major European indices are trading down about 15 to 25 basis points. You're seeing underperformance in a lot of the major cyclical groups. So basic resources, banks, and energy are all for sale. You're not seeing dramatic outperformance anywhere, although some of the safer haven groups like utilities, telecoms, and staples are doing decently. Asia was mixed. You saw outperformance in Japan and mild underperformance in Hong Kong and China. So there's not any major kind of incremental macro news out overnight. I would say, though, that there are a bunch of kind of major themes and topics that investors are obviously paying a ton of attention to. So on U.S. fiscal policy, we're moving now into the Build Back Better stage of the Biden agenda. That includes a lot of infrastructure spending and potentially a lot of tax hikes. You have a Biden press conference today at 1:15. I suspect he will reiterate a lot of his kind of broad fiscal objectives, but I don't think you're going to see specifics on Build Back Better. It looks like he will be going to Pittsburgh next week on the 31st. That's Wednesday, to kind of more formally outline the Build Back Better agenda. Today's press conference at 1:15, I suspect, again, he'll be asked questions about fiscal policy. I think he'll make kind of broad, vague answers, saving the details for next week. And then they'll probably be focused really today on policies like gun control and what's happening at the border. But I think stocks are very much focusing on the specifics around tax potential. So there was a big article in Journal today just talking about how Democrats are pushing forward and starting to work on the details of the tax hike policy. It looks like that Build Back Better will be broken up into two pieces, starting with physical infrastructure and then physical infrastructure coupled with corporate tax hikes as the first phase, and then a separate bill focused on education and childhood care, et cetera, coupled with individual tax hikes. So again, it's not clear what the appetite is in Congress for movement on both spending and taxes. We'll have to kind of gauge things and read the tea leaves from certain important centrist Democrats going forward. But that is definitely going to be an overhang. You're going to see a ton of headlines, a lot of hearings around this topic going forward. The other big theme that's really emerged in the last probably 48, 72 hours has been, the evidence of fading interest among individuals that had been powering a lot of the more dramatic moves in certain pockets of the market going back over the last several months. So, it does not appear that the stimulus checks that are being sent out are being poured into the market. You are seeing evidence that individuals in general are losing interest in kind of the frenzy trading activity that you would have been seeing. So that's definitely something that is a bigger theme that's in focus. You saw yesterday GameStop shares collapsed after its earnings report, and that's definitely something that people will be watching going forward. Just on SPAC specifically, there was an article on Reuters overnight just talking about how the SEC has launched an inquiry into the whole SPAC universe. Not necessarily a formal investigation, but an inquiry just looking at some of the risks and some of the underwriting standards. So that's another topic that will be in focus. The supply chain strains that are besetting corporate America are becoming a huge issue. So obviously this started with autos last year. You had a lot of auto companies come out and talk about how they've been forced to curtail production because of semiconductor shortages. You're now seeing this spread to nearly every pocket of corporate America. You've seen every company that's reported earnings for the last several weeks has talked about enormous supply chain headwinds. Obviously, Nike missed on revenue because they didn't have enough product. A lot of companies are experiencing supply chain shortages, increased input costs, et cetera, et cetera. So as we come into the upcoming earnings season, the Q1 season that kicks off in a couple of weeks, I suspect this will be a huge topic. You're going to see a lot of earnings noise around the supply chain issues. Investors are being somewhat forgiving in terms of not punishing stocks that are or not punishing companies that are experiencing earnings headwinds because of supply chain problems, just given that they are thought to be relatively short-term in nature. And also it's somewhat of a relatively good problem to have in that very strong demand is driving a lot of the supply chain strains. But I think that is just something in the back of people's minds as we go into earnings season, that you're going to see a lot of noise, possibly a lot of kind of revenue earnings shortfalls because of the supply chain issue. And then just finally on policy, monetary policy specifically in the US. So Fed officials have been very adamant that they are not even considering tapering at the moment. But if you go into the March jobs report consensus, so this is out for next week on Friday, April 2nd, which markets are closed that day for Good Friday. The street is penciling in nearly 600,000 job additions, which comes off a very strong February jobs report. So I think that if you were to see the jobs figure come even close to the consensus for next week, it's just going to be increasingly difficult for the Fed to sit there and say that they're not even looking at tapering at the moment. So I think those are all kind of the major themes that investors are looking at as they try to navigate this market. I suspect the price action will be choppy going forward. More of what we've been seeing until there's more clarity on, again, the upcoming earnings season, which will have a lot of noise in it, not just on supply chain, but also the February storms have created a lot of obstacles for some companies, incremental COVID restrictions in Europe, et cetera. More clarity around just how fiscal policy will shape up going forward in terms of infrastructure plus tax hikes. And then just the timing of Fed tapering. Like I said, if the jobs report for March is as strong as the street is forecasting, I think you're going to see the tapering conversation really become louder going forward. And that is essentially everything for this morning. Like I said, no major incremental macro headlines out for the morning. On the micro front, you did have some interesting headlines, Restoration Hardware earnings, the Rite Aid warning, a couple of other things that are of note. I have everything in the piece today. On the COVID front, it's very much more of the same. In the US, I think things are still moving in the right direction, especially as the vaccination numbers increase. You're still looking at the achievement of herd immunity very likely by the beginning of May. Europe and other international markets, definitely a different story. Europe in particular, they have bungled the rollout of the vaccine. So they're 2 to 3 months behind where the US is. Vaccine nationalization in Europe is also a big theme, where you have roadblocks being put up to exports as governments demand vaccines stay in the country for domestic use. India also, there was an announcement out overnight that one of their major drug suppliers could see restrictions as far as its ability to export, as that country also grapples with the resurgence. Just looking at today's calendar, nothing too dramatic. So yeah, Biden's press conference at 1:15 already talked about what he'll likely say. Jobless claims at 8:30. You have a lot of Fed speakers, although again, it's a very consistent message from the Fed. And then nothing all that significant on the earnings front, just Darden Restaurants this morning, and then a couple of smaller names after the bell. And that is essentially everything for today. Thank you for listening.